So as a little bit of a background, we're organizing this particular webinar in this particular arrangement of going costing methods, inventory valuation, and then landed costs because when you're implementing an ERP software with inventory tracking and accounting, whether it's Odoo Online or it's Odoo Enterprise or Odoo Community or even an entirely different software for that matter, you generally need to make a couple of critical decisions early on that will allow you to operate properly. First, you're going to need to choose the best costing methods for your different products or categories of products. This is the way that you actually are going to compute the cost of what you have in your inventory. And this is before even considering your accounting and things like the general ledger. Costing methods simply deal with how exactly you add up the cost of your inventory itself. So depending on your business and your industry, the daily volume of incoming and outgoing shipments, the overall dollar value of your products, the number of individual SKUs you work with, and the variability in the purchase order price that you're paying for your products, one costing method might be much preferred over another costing method. And with Odoo, you can make that choice for all of your items or choose different costing methods depending on the product category. And so, so that's the overview of the purpose of costing method discussion. And so here's what we're going to do for presenting it. For each of the three costing methods, which are standard, average, and real price, we're going to talk about them one at a time. I'm going to run the same 4 example flows of receipts and deliveries for each method, and we're going to check them as we go through it so you can see how the 3 methods compare. Okay, so let's start getting into the specifics. So standard price is the first method. It's simple, and it's also the default method of costing in Odoo. It's just computed based on one set price for a product. In other words, there's going to be a field in Odoo that you've probably already seen on the product page for every product called cost. And here you can manually enter the product cost price. Standard pricing is simply taking that specific cost price and multiplying it by whatever quantity you have on hand. Now, as a special note, with the standard price costing method, the purchase order price has no effect on standard price costing. That means that even if you purchase the product at a different price than what is listed for the product, it doesn't matter in terms of coming up with your stock value cost. And so let's go ahead and actually see that demonstrated in Odoo. So I'm going to jump into this demo database right here. And I want to point out that for this webinar demonstration, we're going to be running through everything as an administrator, which means we'll have access to absolutely everything. I have full access to these different apps and settings and configuration, that kind of a thing. And in an actual working Odoo database, you'll have individual users with their own access, so keep that in mind. I'm going to be logged in as an administrator, so I always like to issue that as a disclaimer in case you're comparing this to what you're seeing and you don't have the same access rights in your own database. So keep that in mind. So let's start within the inventory app right here, which is where we're going to go to set the different costing methods that we're going to use on our products. So this is important to make note of. You don't actually set the costing method on the product itself. Instead, you're going to set it on the product category and then apply the category to products. So let's go to configuration over here and go down to product categories. And I've already created a few product categories for the webinar in advance. As you can see, we have standard, we have average, we have real, we have perpetual. I just named them that to keep it simple and keep it easy to identify. I'm going to go ahead and click on one of them, standard right here, which is what we're starting with, of course. And I'm going to hit edit. Now, as you can see, right over here in this section, you choose the costing method. You also choose the inventory valuation and all these account properties, but we'll get into that later. Right now, just focus on the fact that this one's a standard price. I'm going to save it. I'm also going to show you the other categories real quick. Average has an average price costing method, and real has a real costing method. Pretty straightforward. So then, now that we've created these categories and we have them established, we're going to want to actually assign those categories to products. So I'm going to go over to products here. And I've created a few products for this webinar too. And similarly, to keep it easy to follow along, I've put the name of the method, the costing method, in the name of the product. So we're going to start with our standard price costing product, a metal plate. I'm going to open that up right here and hit edit. So since the specific costing method is defined on the product category, I am going to go ahead and select internal category here, and I'm going to assign it to standard costing. Okay, so now it's all set. It is a standard costing product here. So that's where you go to define that. So I want to make a really important distinction when it comes to terminology in case it's not already clear. When I say cost price in this webinar, which I'll be saying a lot, the cost price, I'm referring to this specific field right here on the product page. And the purchase order price, on the other hand, that's different. That's the amount that's actually paid on a specific purchase order. Now, as we mentioned earlier, standard cost method, it only looks at really this value, the cost value right here, when it is adding up your inventory and coming up with valuation. So for this, I'm going to set it on the product at $10 right here. Okay, so it's set. The product is set, it's got the category, and it has a cost price associated with it. So now we can save the product and we can switch over to the Purchases app to add some of this product to our stock and see how the valuation changes as we do that. So as I said earlier, as we go through each of these three costing methods, I'm going to do the same 4 flows. So bear with me. There's going to be a little bit of repetition, but it's important to see the distinctions, and I'll try to go fast and keep it from being too mind-numbingly, excruciatingly repetitive. Okay, so I'm going to go ahead and create one purchase order right now. I'm going to set the vendor. I just have, for this demo, I just have one vendor that I'm going to use for everything called primary vendor. I'm going to add the product. Once again, it is the metal plate. There it is. And right there, let's say that for this one, I'm going to buy a quantity of 8. At the cost price, it already selects the cost price of $10 right there. And I'm going to go ahead and very quickly I'm going to confirm the order. And I am going to immediately receive that product just from the screen. I'm going to take that shipment and just validate it and say, okay, we purchased it, we got it in our stock, and we brought it into our stock. We've received all 8 of these items. So now when we go to the products screen, which you can view from purchases, you don't have to go back to inventory every time. So I'm just going to go right here to products. If we go to that metal plate, as you can see right from the Kanban view right here, we have the 8 quantity on hand, of course. If you've played around with inventory yet, this is not surprising. I'm going to open that up and take a look at it. So from the quantity on hand button up here, you can click on it and it'll show you the value of this product altogether. And it's very straightforward, it's very simple, it's kind of what we'd expect. We have quantity of 8 brought in, each at $10, so the value is 80. Nothing surprising about that so far. So, okay, so that's the first flow. Second flow, let's go ahead and create a second purchase order. But this time, I'm going to use the same vendor, I'm going to use the same product, but this time I am going to select a different purchase price. I'm going to change the purchase price on it to $16, which is greater, obviously, greater than 10. And this time, let's order specifically 4 of them. Oh, I have to change that again. Let's see, 16. Okay, there we go. And so that adds up, 4 and 16. It's a untaxed amount of $64. I'm going to go ahead and confirm that. Purchase order is confirmed. I'm going to go ahead and receive the products and validate it, just like we did before. Now, if I go back to that product page, open up the metal plate, go to the quantity on hand. So now it says the inventory value is $120 with the 4 items from our latest purchase valued at $40 instead of the $64 that we actually paid for them. And this is because it's the standard cost price method that we defined on the product form. It's used for the stock value calculations, and as you can see, the purchase order price has absolutely no effect on the value of what we have in stock. Instead, it's just using that product price field right here, the cost price field of $10, and multiplying it times the quantity of 12. So it's not necessarily always accurate, that's for sure, but it's definitely simple. So consider that when you're making your decisions about what method to use. So I'm going to do 2 more flows real quick with the standard cost method, and I'm going to try to go fast. One more purchase order. This time I would like to, no, actually this time instead of a purchase order, let's do a delivery. Let's actually ship it out to somebody. So I'm going to go to sales. I'm going to create a sale order. I'm going to choose Sally customer. I'm going to choose that same product, the metal plate. And I'm going to go ahead and this time, let's sell 10. We have 12 in stock total. I'm going to sell 10. I'm going to confirm the sale order. And it generates, of course, a delivery. And I am going to go ahead and validate, and ship out that delivery. So I've just delivered 10 of our 12 metal plates. If I go back to the product page for it, of that metal plate, quantity on hand has gone down to 2, which is to be expected. We had 12, we just shipped out 10. Now we have 2 left. If I open it now, nothing out of the ordinary, nothing to be surprised by. It just takes that standard cost field of $10, multiplies it by the 2 we have, and we have $20 cost. Okay, one final flow for the standard cost method. I'm going to do one more purchase order. I'm going to say that primary vendor, I'm going to do that same item right here, metal plates, and I am going to go ahead and this time I'm going to do a cost or a purchase price of less than that. So I'm going to say let's purchase 2 more, and let's do $6. And I'm going to go ahead and confirm that purchase order. So yeah, so once again, this is less than the $10 cost price field that we have. I'm going to take that shipment, I'm going to receive it, I'm going to validate that, bring it into stock. Now that it's brought in there, if I go back to the product page, metal plate, we have now added those 2, we have 4 on hand, and it's $40. So I apologize if that seems extremely simple and extremely straightforward, but I think it's good to establish that as a baseline before we go to the more complicated costing methods, because I'm going to follow the same flows, but it's going to have completely different results. So recap. At the risk of sounding really repetitive, the main point I'm trying to make here is that it doesn't matter what the cost is on the purchase order itself. For standard pricing, it just looks at the quantity you have on hand and multiplies it by that field right there for the cost price, and it comes up with the stock valuation for that. So as a side note, usually when a company decides exactly what to enter here for the cost price, generally it's an estimated value that's based on the raw materials, the product list, possibly labor costs, and it's usually not updated very often. Maybe it's updated once a year, or if their vendors release another price list. It's usually best to use it, the standard price costing method, when there isn't a whole lot of fluctuation to the cost over time, if it doesn't vary a whole lot. That's a good option to use standard price costing. Okay, so that's enough for standard price costing. Let's move to the next costing method, which would be the average price costing. Okay, average price costing. So with average price costing, the purchase order price actually does matter. Every time the product is purchased and received and brought into your stock, the cost price gets recalculated based on that specific price that was paid on the purchase order, and also the quantity ordered. So you'll see it in action in just a second through our examples in Odoo, but basically if you purchase the same item at different purchase prices that fluctuate over time, then every time you receive that inventory into stock, Odoo is going to add up what you've spent in total on the product and then divide it by the new total quantity you have on hand, and that average amount will replace your cost price field. It's going to update that cost price field over time in real time. So for average costing, it's also worth pointing out that the deliveries, the specific outbound deliveries, they still don't have any effect on the cost. Great. So here's an example. I'm going to outline this example on a slide first before we actually demonstrate in Odoo, because it does involve just a minor amount of math, and I think it's good to point it out. Is that if we first receive 8 units at a unit price of $10, and it matches the cost price of $10, stock valuation is going to be $80. It's just $80 total divided by price of $10. So far it's the same as standard, nothing crazy out of that. But then if we next receive 4 more additional products, but it's purchased at a different higher price of $16, this is where it varies. This is where it differs from the standard method. So when we do it this way, it's going to give us a total of $144, because it's the $16 times 4 plus the original $80. So $80 plus 64 equals a new stock valuation of $144. So it's going to be accurate in that regard. And the way it affects the cost price is it's going to take this value and divide it evenly by the entire quantity of what you have on hand now. So it's going to take that 144 and divide it by all 12 of them, and therefore we get a new cost price value of $12, which in Odoo is going to automatically get updated onto the screen. So then the third flow, of course, is if we then deliver 10 units if we send 10 units out there, it doesn't really have any effect with average costing, doesn't have any effect on the cost price. All it does is it's going to take 10 units out of stock, and then it's going to keep that same cost price of $12, multiply it by the 2 remaining ones, and it's going to say our stock valuation left over is $24. So the thing to point out there is that if you ship it out, it's not going to have a change or an impact to the cost price. It's really just when you're receiving it at varying purchase prices that it's going to affect your cost price when it comes to the average price method. Okay, so that's enough of explaining it from a slide perspective. Let's go ahead and actually jump into Odoo and demonstrate it. So I'm going to go and I'll take a look at the product categories again and make sure that we apply it to the proper product. I have one here that I've created called wooden panels, and I'm going to make sure that it is set there. It is, okay. Now the cost value right here, the cost price field, it's 0 right now, and that's fine because with average price costing, this is going to continuously update every time we get a new purchase of the product in. So there's no need to enter a field there yet. So let's go through the 4 examples real quick. Hopefully this will be faster this time in the interest of time. I'm going to go ahead and make a purchase order. I'm going to do the primary vendor. I'm going to choose the new product we're working with, which is the average price costing wooden panel. Select that. I'm going to say quantity of 8. And I'm going to say that we're ordering that at the that original price of $10, which is fine. I'm going to confirm it. I'm going to receive it into my stock. And then we're going to go ahead and take a look at the product and see how it's affected. Wooden panel right there. And so now if I take a look at my quantity on hand, see, it's not actually there. Bear with me a second. Let's see. Purchases of the wooden panel product, quantity 8, shipments, validate. Oh, I don't think I actually received it in stock yet. Okay, now it's actually in the stock. Okay, great. So let's look at the products, bring up the wooden panel. And okay, cool. So the cost field has been updated. It is now $10. As soon as you receive the stock, that's when it updates this. So we have our quantity on hand, open it up, and so far it takes that 8 quantity, multiplies it by the amount that we just paid, which is $10, and it's 80. Okay, so far exactly the same as when we did standard pricing, except for the exception that it added the cost directly on this cost field for us. So next, let's do a second purchase order. And just like last time, this time we're going to do a higher cost. We're going to use the same wooden panel product. Instead of $10, which it's automatically filling out, I want to do quantity 4, and I'm going to do a higher price of $16. I'm going to go ahead and confirm that. I will receive the products and actually validate this time, which is what you're supposed to do. Bring it into the stock and go back to the product. All right, so what's happened now? The cost went up. It went up to $12, just like we saw on the slide, because now our quantity on hand is greater, it's 12, and it actually separates them like this. It says we first got 8, then we got 4, but the cost gets recalculated as an average. So now that we have 12 items, it takes an average cost, and which ends up being $12, and divides that amongst each individual item in our stock. So it can continuously recalculate that quantity or that cost field whenever we're doing average costing. So real quick, I'm going to do our third flow for this, which is a sale order. I'm going to make one sale order for John Fredrickson, let's say. Choose that wooden panel. I'm going to ship out 10 of them. I'm going to sell him 10 and deliver them. Confirm it, and take that delivery and validate it so it leaves our stock. And just like I demonstrated earlier with the slide, when you're doing the average costing method, it doesn't have any direct effect when you deliver it on the cost. It's still $12, it's just the quantity has gone down by 12 down to 2, and that cost is still used to calculate the cost of it in your valuation. So no effect on the cost when you deliver it. Finally, fourth flow for average costing, I'm just going to go ahead and purchase 2 more of the items. And this time I'm going to do a lower cost. I'm going to bring it down to $6 for each one. Yeah, actually, for a nice round number, let's go ahead and do it with $9 because that's going to be not a decimal. So let's say $9 real quick. Two of them. Going to confirm the order. I'm going to receive the products into stock. Validate it. Go back to the product. And if you're following along, you shouldn't be surprised that the cost has gone down. Okay, I was wrong with my math. That actually did create kind of an uneven number, but it's okay. So if we look on hand, the new average price is the new cost for it is $10.50, and it has been split up like so because we brought in those products at a lower cost. Okay, so that's enough working on with the average price costing. Let's now move over to the third and final type of costing method, which is real price. I'm going to switch over back to my handy slideshow. Okay, so the real price method, it is the most complicated costing method, and it's also the least frequently used of the costing methods in Odoo. The cost price is determined by the actual purchase price as items are received, and unlike average costing, the cost is not actually calculated as an average. Instead, it keeps your inventory separated in groups or quantities as needed based on the purchase price. And so, because it keeps track of exactly what was paid for each batch of received products, the cost price is also affected by the removal strategy when you actually deliver it. So, for example, let's say we receive our first 8 units at $10 each, bringing our stock value to $80 total. That's the same as it was when we did standard and when we did average. No changes yet. But then when we receive 4 more units and bring those into stock at $16 each, a higher price, it brings our total valuation to $144, just like an average. However, because this is the real price method, Odoo does not recalculate the cost of your 12 products and take it an average. It doesn't do that. Instead, notice that it actually keeps track of those separate quantities at their original price. So I'll show you that one in a second in Odoo, but it's going to keep each section of inventory as it was brought in listed with the price that you paid for that section of the inventory or that quantity. And so notice that here we have 8 times 10 listed as part of your cost price and 4 times 16 listed over here as part of your cost price. That's the real price method at work. So next, when we actually deliver and ship out 10 units, this actually does have an effect on it, because if we are using the first in, first out, or FIFO removal strategy, our stock value will be reduced by the first 8 units at $10 each, and then by 2 units at $16 each. In other words, in order to supply the full 10 for this delivery, we're going to use up all 8 of the first batch, and then we're going to start pulling from the second batch. We're going to take 2 more units out of that second batch to get to the total of 10. So the stock value and the quantity are reduced by $80 for that first batch, those first 8 at $10, and then by $32 for those 2 at $16, so bringing the new total stock value to $32 for the remaining 2 units. The unit cost here that you have, it remains at $16 each, which is the same as the actual purchase price that you had for that. It can get a little bit confusing at first until you wrap your head around it, but it'll be easier to see it in a second when we actually go through the flow in Odoo. And then just as the fourth example here, if you bring in 2 more units at a lower price of $6 each, this will increase our stock value by a total of $12, because $6 times 2, it's $12 added to it. That brings the new stock value to $44, and once again, it doesn't take an average, but rather it keeps them separate and keeps the original cost purchase price identified and assigned to it. Okay, great. So that's enough of that slide. Let's go ahead and switch over to Odoo for our 4 flows, so you can see it in action. To set it up properly, you're going to want to make sure that the product category not only is set to real price, which we'll do, but also here you can specify the removal strategy. Now, right here I'm going to go ahead and say first in, first out for it. That's actually the default. You don't actually have to specify that because it's going to default to first in, first out anyway. But as you can see, you can also do last in, first out too. I'm going to go ahead and save that and say that we're going to use this removal strategy when we deliver products from here. I'm going to go into my products, and now we're going to work with a third product called aluminum siding. And the aluminum siding I have already set to the real price costing method. Okay, so example number one. Now that the aluminum siding product is all set up, let's go through our 4 receipts and deliveries as we have for the other costing methods. Create a new purchase order. Once again, using the primary vendor, I am going to take the aluminum siding. I'm going to do a quantity of 8. I am going to set it at a price of $10, and I'm going to confirm it, receive the products into stock, and validate. Brings it in. Take a look at that aluminum siding product now. It doesn't affect the cost field here, and I think that's important to point out. You might think that it would, but since this cost field is in Odoo, it's just one monetary field right here. We don't have the ability to realistically show it the way it is actually going to be displayed once we have multiple quantities in stock of different cost prices. It'll make more sense in a second, but basically, if you're using real price, you normally wouldn't refer to this cost field. It's instead, you look at your quantity on hand, and you take a look at this, and you'd see we have the 8 totaled at $80, and that's normal. That's to be expected, just the same as the other 2 methods that we've done so far. Let's do another purchase order, though. Let's do our second one. This time, we'll do it at a higher purchase price. Do the primary vendor. We will do the aluminum siding. We will do 4 quantity. We'll do a unit price of $16 each. Great, I'm going to go ahead and confirm it. You're familiar with this flow by now. I'm going to receive it, I'm going to validate it, bring it into the stock. Okay, now let's go ahead and switch back over to the product and see how it is different from when we were doing average pricing. So, the quantity is 12, that's normal, that's good. If we open it up, instead of taking that cost and dividing it as an average amongst everything, instead what it's doing is it is keeping track of what you actually paid for those batches, which is what we talked about before. So yeah, $80 for the first one, that's $10 times 8 for each one. But then this new batch, it's keeping track of it. So the end total ends up being the same as before with the average cost method so far, but the individual batches are different. And this is going to be important because when we actually start delivering it and we start taking things out of stock, it's going to affect what we actually what the dollar amounts are that we're getting rid of when we're delivering it. So let's go ahead and do a sale order for it. Create a new sale order. Choose Sally. I'm going to grab that aluminum siding. I'm going to deliver 10, which is enough to dip into both sets of stock, both the original 8 and then the additional 4. I'm going to confirm it. Take that delivery and validate it, meaning we've actually sent it out of our inventory. Go back to the product page, take a look at the aluminum siding. Okay, so now if we open up the the quantity on hand, we only have 2 in stock left, and it is $32. And this makes sense because all 8 of our original shipments were prioritized first because it's first in, first out. We shipped those out, got rid of them at their price point of $10 each, and now we just have 2 left of the second batch, each at $16, so therefore it's 32. So the removal strategy is very important in this case because if we did last in, first out, it would be different. We'd have a different result. So I also want to point out that only at this point does it actually update the cost field. So it can do that depending on the conditions here. Once again, I don't really recommend relying on this too much if you're using the real price costing method. So finally, let's just go ahead and purchase 2 more products into stock as we've been doing with the flow so far. Bring in, from the vendor, let's bring in 2 more of the aluminum siding. 2. At this time at a lower cost of $6. Confirm the order. Receive it into stock, validate it, take a look at the product right here. Now we have 4 on hand, and just like before, it splits them up and has the appropriate and real price associated with what we actually paid for those shipments. Here's the 2 that were at $16 each, and then here's the 2 that were $6 each that we just brought into stock. Okay, so To summarize costing methods, which we've just spent a lot of time, probably more time than you were expecting to spend on costing methods, to summarize it, three main methods. There's standard, which simply uses the cost field, and the purchase receipts and the deliveries don't have any effect on the cost. There's average, in which the purchase price is used to recalculate the average cost every time the goods are received, and outbound deliveries don't have any effect on the cost. And then finally, real method, which is a little bit more complicated, and in which case the cost is determined by the actual purchase price, and there's no averaging out. It just keeps track of those actual purchase prices per quantity of inventory and stock that you have in. And it also is affected directly when you deliver things because of the removal strategy that you have in place, whether you're bringing or getting rid of your first in products first, or you are prioritizing sending out your last in products first. And as far as why you would choose first in, first out, or last in, first out, it's kind of a discussion for another thing, but sometimes companies will choose to do last in, first out if they anticipate that the purchase price is going to increase for a particular product over time, and it's better for tax liability purposes. But really, that's more of a matter for accounting and a company's personal decision based on company